Do you want to maximize your success with NCUA? Join Mark Treichel as he shares with you the insider's view on passing your exam with flying colors. The With Flying Colors podcast is sponsored by Credit Union Exam Solutions by Mark Treichel. If you would like to work directly with the Credit Union Exam Solutions team and receive support to optimize your results with NCUA so you save time and money, visit us at marktreichel.com to find out more.
Hey everyone, this is Mark Treichel with another episode of With Flying Colors. This is part of a recording I did with Steve Farr and Todd Miller of my team. Steve, Todd, and I worked on the biggest and baddest conservatorships in NCUA history and have a lot of knowledge on this topic. If you don't know what the term conservatorship means in the context of credit unions, that's when NCUA removes the board and steps in and represents both the insurance fund and the members for a particular credit union. So without further ado, here's myself, Steve, and Todd on conservatorships.
All right. Conservatorships. They're an adrenaline ride. As a former special actions person, as you two were, you learn a lot. They can be a challenge. They can be fun. They can be scary, and they can be very effective when they're appropriate. So let's talk a little bit about NCUA's conservatorship approach and powers.
So conservatorships are quite interesting. And I think one reason NCUA doesn't go down the path of cease and desist very often is usually by the time you get to that place where you have legal grounds to issue a cease and desist, you almost have the legal grounds to conserve a credit union too. And by then problems are pretty severe. They're usually related to the people in place being unable or unwilling to correct problems. Going through a cease and desist isn't going to change that if they don't have the competency to fix the problem. Giving them a cease and desist isn't going to magically resolve that problem. There are almost always people problems at this point. You're almost always getting close to involving potential losses to the insurance fund at this point. So from a legal perspective, quite often, it's just as easy for a regional director to pursue a conservatorship than it is a cease and desist. And then once NCUA is in control, they can make a better assessment of what are our potential losses here. Can this credit union be saved? Sometimes we've conserved credit unions just because we've tried to get them a merger partner and people wanted $40 million in assistance, and you conserve them and you clean up the books and you clean up some of the bad loans, and that cost of the insurance fund drops to $20 million the next time you bid it out after NCUA's had a period of time hiring some competent people to clean things up. And other times can clean things up and end up with a stable credit and you can return it to the members. You just give it to a different set of board of directors that we recruit, the CEO that we recruit. I always thought as a PCO and as a DSA that NCUA should do more conservatorships because you said you learn a lot. Here's what happens. We go through a recession and we do a lot of them. I think in like 2011, 2012 in our region, we may have done 6 or 8 of them. I know at one point I had 4 at one time, but you learn a lot and then the economy gets better and all those people move on and get promoted and retired. And then 8 years later, when you're doing it again, you've lost that skill set and you have to relearn all the lessons over again. So I also think you should do more just to keep people in practice because they're a lot of work. And like you said, they're fun. The year when I was managing 4 of them, okay, I didn't take a day off those weeks. I worked on Saturdays and Sundays too. When you brought me into Westcor, so I spent a whole year there under your supervision, Mark, at Westcor. Similar things. There's a lot of days that are fun. You learn a lot. And there's other days that are not very pleasant when you're running a conservatorship. But ultimately, NCUA, when they do conserve a credit union, they try and make a decision early on. Is this salvageable or are we just trying to put lipstick on this ugly beast and try and reduce our losses to the best of our ability?
Said Steve.
Yeah, I had the unique opportunity. It was pretty great. I got to, as working for NCUA, I was involved in direct supervision of a number of conservatorships and assisted people with other ongoing ones. And then post-retirement, I had the opportunity where I went in and was part of the management team that NCUA brought in to run a conservatorship. And so it was nice to see both sides. It was very interesting when I was on the side of the conservatorship management team that we had issues, of course, dealing with our regulator. I was in conservatorship. And so I would get frustrated with the regulator and that I wanted to stay focused on the issues that needed to be resolved. And so it still is NCUA, the conservatorship team is still working with the regulator on that, and it can create problems. But the other thing that we had is usually, as Todd pointed out, you conserve them because you just can't deal with mainly the people or the board of directors that are there anymore, just aren't taking care of it and putting the fund at risk. The first thing, you clean all of that out. And then when you come in a conservatorship, the first thing we did in action was actually on there was we reviewed the abilities of all of the senior managers to make sure that they were the people we needed to resolve everything. And there's usually a large number of terminations that would take place because we needed to gain efficiency also.
I think back in the day, they'd say those who were part of the problem will not be part of the solution. So NCUA comes in, the board is removed, the regional director represents the members, serves as the board, and also as the regulators. If there was someone who was in a loan program that went haywire and should have known better, those folks will go find their happiness elsewhere under the conservatorship. And then oftentimes NCUA will bring in a team like you mentioned. And I believe that I know the one you worked on, it was one of those success stories where the region was able to turn it back to the members, and it's out there thriving right now. And another one of yours, Steve, I think they named a boardroom after you, right? The Steve Farr boardroom.
Yeah, just because we're going to build a cheap building. He did a new building. We're going to do it. Yeah. But those are nice when you can go back, and Todd and I have that thing is you go back and look at those conservatorships and check their numbers every now and then. It's like, it'd be really neat to go visit them again someday, but we probably don't. But yeah, the conservatorship is we always refer to as kind of the most extreme option NCUA takes, is it has to be approved by the NCUA board. And then you got to go back to the board when you have the success and you're returning it to the credit union. And the NCUA board would also be involved if they turn into a liquidation and stuff, because the regional director is appointed by the board. NCUA board is in charge of it, and then they appoint a regional director that is basically what the conservator. I'm trying to remember exactly what that document
for the conservator.
The agent for the conservator, and then letters are written to everybody who's working in that case that you're a sub-agent of the conservator. So it's lots of legal paperwork is completed.
Lots of legal paperwork. And as you're talking through that, I'm getting a smile on my face because I'm thinking about that. So there is no board, right? And then you could have an advisory board, which will be some NCUA staff. And then there was this pendulum that swung towards, we need to have more robust documents of what the conservator is doing, and there'd be formal board meetings. And then there were lawsuits, and then the pendulum swung as, we don't need as robust board documents for conservatorships. And then contrast that, this is a total non sequitur kind of sort of, but then I contrast that with where NCUA is going on corporate governance right now, as far as you must document everything. Or that's how some examiners are interpreting it. And as we've told our clients, there's some things you want to put in board minutes, there's some things you don't. NCUA wants to understand that you're involved and that the board is doing what it needs to do, but there's a balance. And you, as a conservator, you would be running the credit union, and you would start to understand some of those balance issues more than you would have just being a government NCUA worker, which goes back to you, Todd, saying it'd be great if they did more so people could learn from the process.
I always thought that balance was one of the hardest things to strike, because most of the time when you're involved in a conservatorship, the credit union is not going to survive. There are ones that do survive, and we've all mentioned that those are high points in our career when we get to return that credit to the members. Most of the time they don't. But the agent for the conservators got a tough row to hoe, because they're there as the members' representatives, and sometimes doing things that are best for the members is not what's best for the insurance fund. And they're also a regional director in most cases, and they're there to do what's best for the insurance fund too. And sometimes there's a conflict between those two things that is difficult to navigate, which is why sometimes you want less documentation about things. But for the most part, fixing troubled credit unions, whether they're in conservatorship or not, or the conservatorships that we have resolved, they almost always going back to doing what's in the best interest of the member. That's generally the way you fix the credit union, is get it refocused on what is in the best interest of the members here. And you go through that process, and generally that's what you go through to actually fix a credit union and return it to its members. And I think even for credit unions that just get an unpublished LUA or even a DOR, if they keep that in mind, that what's in the best interest of our members, it's going to lead them down to the right path, not just when you're in a conservatorship. It just seems to be the heart of a lot of problem resolution in credit unions, is what is really in the best interest of the membership.
And you know what? That's my alarm that says time for a client call, guys. Thanks so much for sharing your wisdom on this topic. I know it gets my blood flowing talking about conservatorships because it brings back good memories, bad memories, and scar tissue. Thanks for your time, guys.
Have a good day.
You too. And those who are listening, I want to thank you for listening. I hope you'll listen again soon. This is Mark Treichel signing off with Flying Colors.
Thank you for joining us on this episode of With Flying Colors. Subscribe on your favorite podcast app to hear future episodes where subject matter experts of all varieties will provide tips on how to achieve success with NCUA. If you would like to learn more about how we assist credit unions, check out our services at marktreichel.com.